Well, hello, everybody. Welcome to our latest installment of our podcast. This is being brought to you by Blue Dolphin Engineering and the Pie Shop, a product business incubator located here in beautiful downtown Fresno in the Mural District. Today, our subject is going to be related to accounting and more specifically, managing your business accounting records. And our special guest today is Tami Arnold.
Thank you. Nice to
I'm
meet you again.
Glad you're here, yes. Tami is a California State University Fresno grad. She got her bachelor's in business administration. With an emphasis on finance?
Yes, accounting.
Yes.
Mm-hmm.
She worked as a CPA for Russell Rosensteel, and later she moved to John Moffett Associates in 1998, and where she was the CPA manager, certified public accountant manager. She remained with John Moffett after it grew to Slater Moffett Associates, where she functioned as the senior tax manager. And then eventually in 2017,
yes,
Slater Moffett became part of Sensiba San Filipo, and Tami continued her role as a senior tax manager and a CPA. So welcome, Tami. It's wonderful to have you here. We like to talk about a lot of different things on the show. The thing about being an entrepreneur and starting a business is there are so many different pieces of the puzzle that make up a business. And normally entrepreneurs are the expert at the thing that they're working on.
Exactly.
And often they're not an expert at anything else. So, and accounting money happens to be a frequent piece of the puzzle that's missing, I believe.
Yes.
So what do you mean when you say you're managing your business accounting records? I mean, what is that?
Well, I think you're right on the mark when you're talking about entrepreneurs starting out. They're very focused on sales, and that would be natural because without the money coming in, you can't continue your business. But there are different aspects of your business that you need to take care of, and one of those being specifically your accounting department or your managing your accounting records. And in basic terms, managing your accounting records is actually what they call bookkeeping or accounting, is tracking your financial transactions in your business. Where is your money coming from? Where is it going to?
Yes.
And making sure that you're categorizing that in such a way that it's going to help you with future business plans, monitoring how your business is progressing, and ultimately doing the proper reporting that you need to do for your business.
Sure. So you mean it's not just, I got checks in my checkbook, so I guess I have money?
That is exactly it. There's a lot more to it. And unfortunately, I would have to say at the beginning, when you're starting your business, you're focused on other areas. You're focused on sales, you're focusing on marketing. But there is that aspect of your financial side of your business that you have to monitor. And normally you don't think about that until it comes time to do, say, your tax return,
yes,
or to get that bank loan.
Sure.
But it's important, I think, up front at the very beginning to start establishing some best practices.
Sure. I agree. I think that having an understanding of some of the basics is very important. I like to tell people that without cash, basically, in some form, you don't have a business. So, and even if you have cash coming in, if it doesn't come in at the right time, you may not have a business.
Exactly.
So, kind of segues into our next question. So what are the benefits to tracking your income and expenses other than monitoring the financial progress of your business?
Well, definitely monitoring the financial progress of your business is very important, and accounting will help you do that, and establishing some basic golden rules up front or best practices like reporting your information daily, reconciling your bank accounts, reviewing those accounting records, keeping those accounting records, and maintaining those are very important. But besides just managing your financial progress, there's also things like you want to make sure that you're accounting for all of your expenses, all of your, in essence, potentially tax deductions for yourself, and that you're properly reflecting that in your records, because that's going to be important come, of course, tax time, or any type of reporting that you might have. It's also monitoring not only your expenses, but monitoring your receipts. And so things like non-taxable receipts, such as sales tax, or loans that you have that are coming into the business, advances that you make to your company. Those are all not going to be taxable to you come tax time. So it's important to monitor those so you're not over-reporting your income. You can also find, if you're tracking properly, making sure that you don't have errors that occur. So, of course, you might have errors with outside that you can monitor with outside institutions, like doing a bank reconciliation and realizing maybe the bank did something incorrectly. But also monitoring internally. Are you invoicing your customers twice, which would cause you to lose customers? Are you paying invoices twice? So that's going to be important. All of that kind of leads to, of course, reporting, and if you're not reporting properly, there's the assessment of penalties. So you can avoid penalties by having proper accounting records going forward. Also, too, what's important is you're going to need a lot of your financial records for, of course, getting loans, getting investors. That people are not going to invest in your business if you don't have the proper financial projections. And accounting is the monitoring or the tracking of transactions that have already occurred. That is important. But what is more important is utilizing that information and forming budgets and projections and plans for your business going forward, and that's going to help you along the way.
I can see definite benefit, I would think, to a lot of those things. I know that sometimes when you have this kind of information at your fingertips, at your disposal, you can see sometimes where money's going that you may not have expected it to go. Like bank fees for not keeping minimum balances, or look, I'm spending all this money on pizza every day, and I can't deduct it from my taxes anymore. Or if you never record it and you haven't kept accounting of it, then when it comes time to do your taxes and to reap the benefit of that, it could be troublesome, and you could be a lot of things you're overlooking. I know that some of the benefits of being a business owner is taking advantage of the tax write-offs and deductions to benefit the business and yourself. And I believe the thinking, and I would see what you think about this, but I think the thinking sometimes is I'm going to get a pretty big tax bill, and I have to do things to reduce that as a sole proprietor or whatever, business owner. Because you normally nobody's taking taxes out of your paycheck like you do when you're working for somebody else. So
Exactly. And that's one of the reasons why you want to kind of monitor that is it's important to realize that there are certain tax deductions. And I think some people, sometimes when you're entering into a business, you don't realize certain deductions that you might have. One of those being startup cost, and monitoring that as you're kind of going through. With startup costs, of course, you do have to what we call capitalize those. So you may not be able to take the write-off in the current year, but you can take it over future years. And so you do want to maintain all of the expenses that you incur up front in the start of your business. There are some exceptions. You can't, some regulations that allow you to write off like about $5,000 of it if you're costing under a certain amount. So those would be things you would want to look at. You also want to look at the purchase of your equipment and monitoring that. Those can be, again, would be capitalized. They would be depreciated over a period of time. But there's special regulations that allow you to take some of those write-offs in the current year, so you're recognizing that cost sooner. You also want to look at, especially if you're starting off new, you can't afford rent, you're working out of your home, home office deductions are available for you, especially if you have an exclusive area that you're utilizing in your home. You want to monitor the upkeep of that space so that you can go ahead and take those deductions. Those are definitely benefits for you, things you want to look at. Auto being another one. Making sure that you're maintaining an auto mileage book. All deductions you can take advantage of. And I also think, too, we don't think up front about retirement. It would be very good up front for an entrepreneur, even though I know you're struggling usually with finances, just to start putting some of that money away for retirement. It is a tax deduction for you.
Sure.
And you're getting into the mindset of doing that up front.
Sure, yeah.
So.
Yeah, all very important things that help you make business decisions. You mentioned when you buy equipment. Sometimes the decision to buy a piece of equipment, if you're making money, deciding to depreciate it or to accelerate the depreciation of it could be a very important business decision that could really help your reduce your tax liability.
Yeah.
So it's helpful to understand some of this stuff, because something you may think you may not be able to afford, in actuality, when it comes time at the end of the year, there may be benefits that could be helpful, but you have to, number one, I guess you have to have this, as you said, keep track of all these things and have
Exactly.
a professional or somebody to work with. One of the questions I had was, okay, so we want to track your income and expenses. So what are the ways of doing that? There's software out there?
There's definitely different software that is out there, and it's all going to be dependent on a few different things. First of all, you got to know what type of business or entity type of business that you're going to be involved in. There are different types. First of all, you can be a sole proprietorship. With that, you're mainly reporting your income and expense on your personal return. The tracking of that might be very simple. It might be a simple Excel spreadsheet, or just monitoring kind of your expenses going in and out of a bank account. As you get into more complex entities like a corporation, a partnership, an LLC, those require probably a little bit more as far as your accounting software. You have products out there like Sage, QuickBooks, that will allow you to do either on a desktop or online accounting. It has a double entry system, so it's not just you listing out income and expenses and giving that to your tax provider, but it actually will monitor a general ledger for you. And what that really means is, with a double entry system, you're really tracking where the money is coming from and going to. And that's going to be very important.
Okay, well, wonderful. So, so a new entrepreneur, they're getting started, they're organizing their business and all that stuff. What kind of advice other things would you, advise a new entrepreneur to do? I mean, as you said, they're focusing on making their widget. They're going to have the best widget in the world. They're going to sell a million of them, and everything else is kind of thrown off to the sides. What are the kind of things they have to be thinking about?
Well, definitely we talked about, you want to up front kind of think about the type of entity you would like your business to be, whether that's a sole proprietorship or a business entity. That's going to be kind of reliant on things like what type of business you have, what liability you have, where you might want to limit your exposure for your personal assets by maybe forming a corporation or S corp. Of course, insurance is your main protection on that, but that's something you want to look at. You may also, and of course, that determination also may be how many investors are going to be in your business, what type of investors you would have in your business, and other legal aspects. Besides that, a simple thing would be to, of course, establish a separate bank account, a separate credit card for your business. You do not want to commingle that with personal. It's not only just the idea of being able to easily track your expenses, but also, too, if you do form a business type of entity, a C Corp, S Corp, you need to have a legal separation between you and the business, because it could cause legal issues if you're running personal expenses through your business account.
Sure.
The other things, too, is you want to probably get an employer identification number. You're not really required if you're sole proprietorship. You can utilize your Social Security number.
Okay.
However, I kind of caution against that, partly because when you're starting a business, there may be reportings that you have to do. An example would be a 1099 to people that are providing you service.
Sure.
So anybody that provides you service over $600, in general, you'd have to issue a form to them reporting their income as well to the government. That's going to require some sort of ID number for yourself. Putting your Social Security number out there is not the best thing.
Sure,
So employer ID number, it's easy to apply for. It's on the IRS website, so definitely to do that.
So I know that once again, through my business experiences, I've started 10 different businesses, which sounds kind of crazy. I think it is actually, but some of the things I've realized is that I'm schooled as an engineer, and so that's my field of expertise. But there are some nuances about accounting that I'm sure people can study to learn. For example, the difference between cash and accrual basis. But there's other nuances of accounting that are acceptable practices in the accounting world that sometimes aren't necessarily intuitive, and those are covered under GAAP.
Yes,
GAAP here.
exactly.
What is GAAP and what is cash and accrual?
Yeah. Well, in basic terms, cash and accrual, there's two ways to kind of run your records. Cash basis is you would recognize cash as you receive it, and you would recognize expenses as you pay that as cash basis. On the accrual basis, it's a little different. You recognize income when you actually earn it. Not actually maybe when you receive the check. And you recognize expenses when you actually incur those expenses, not actually paying them. GAAP, General Accepted Accounting Principles, is a way that you would is a way that you would actually would utilize those regulations in preparing financial statements. Internally, you can run your business cash or accrual, but if you're actually doing reporting to financial institutions, such as trying to get a bank loan, of course, we as an accounting practice wanted to make those standards similar across the board, so people's financial statements did not look totally different one from one another.
Sure.
There was a standard, and those standards are under GAAP, and those would list what you can report on a financial statement, what you need to disclose in your financial statement notes, what you need to disclose as far as a balance sheet, income statement, a cash flow statement.
Sure. So we've been talking about entrepreneurs, of course. One thing that a lot of entrepreneurs think, they have this great idea and they want to get some outside funding, whether it's a bank, which usually doesn't come early on. Like you usually have to have some kind of revenue or something to expect that kind of money to come in. But early on, it might be equity type financing or some debt financing through an investor, like an angel investor or venture capitalist, or friends and family, whatever the case may be. The interesting part about it is a lot of people expect, well, I get this great idea, I'm just going to pitch it and they're going to give me a check. Well, it doesn't quite work that way. At some point in time, these people are giving you maybe a lot of money, and they want to make sure that you have your act together. And one of those things that has to look appropriate are your financial records.
Exactly.
So even as an entrepreneur doing a startup, keeping track and making sure that this has been established and is correct is going to be important, even for the entrepreneur looking for investment money.
Definitely. Your investors are going to be looking to see not only what you have done, so looking back on transactions you've done, which would be part of your financial statement, but they're also going to look at projections that you have going forward. Those projections will be financially items that they'll look at, budgeting. What are you looking at as far as future financing for the company, future operations, and what is those potential sources of income that are going to be coming through? Are those going to be able to cover your cost? So they will look both what has occurred in your finances, in your business, but also what is going to occur. And that's going to be a part of your budgeting. They're going to look at projections going forward. So.
Sure. So besides income taxes, everybody knows you got to pay the IRS, but what are the other types of taxes that you have to be concerned about, and forms you have to file, and those kind of things to make the government, whoever that happens to be, happy?
Yeah. Usually we're scrambling at the very end in March and April, trying to get all of our records together to get it to the tax person, to get it filed on time. Yes. And that's it. That is important. That's probably one of the major things that are out there for an entrepreneur that they think about just before it needs to be filed.
Yes.
And you probably want to, as an entrepreneur, you want to do some tax planning. So it's not just enough just to do your tax return, but I just want to throw that in there, that tax planning is also a part of all of this. But besides your tax return, there may be other types of taxes you're subject to. We talked a little bit about it. So payroll taxes would be definitely one of those. So if you hire employees, you're going to have payroll taxes. With that comes the normal filing of payroll. So the withholding that you take from your employees, that does need to be deposited with the proper taxing authorities. There needs to be annual, quarterly filing, both with the government and with your employees. You may also be subject to sales tax. So depending on the type of product you're selling, the sales tax is usually assessed at the final user, and you would be collecting money as part of that income, and that sales tax portion, again, is not your money. That would be money you would need to send off to the State Board of Equalization. I think they've changed their name just recently.
Yes, they have. I don't know what it is. But, yeah.
So that would be something you would want to track, and you would need to send off. You would also be looking at, of course, filing a business tax for the city that you're working in. So you do need to make sure that you have proper licensing for operating in the city, and also proper documentation for operating in the state of California. So one of the things you do need to file in addition to your return, either on an annual or a biannual basis, or every 2 years, would be your statement of information form. That's a critical form that you do need to file with the state of California for operating in California. If you do not file that form, they will suspend your license, or that's not good. So any contract you enter into could be null and void if you're not keeping up on that reporting. It's really a very simple reporting, but something that you do need to do.
And once again, that report is, what's that called?
It's called a statement of information form. It's it's basically a one-page form just telling the state where you're at, where you're located, who your officers are, and if there's been any changes to those officers. So simple form to fill out, but a very necessary form.
Sure. You mentioned the State Board of Equalization, and I still don't recall what their new title is, but those guys. There are some nuances that are helpful as an entrepreneur. A couple of those things are, if you're doing work and you're creating prototypes and you're selling prototypes, then under certain tax regulations, you may not have to pay sales tax.
Exactly.
And it's important to know as an entrepreneur, because most of the time, if you're making a product or buying or selling a prototype, that's often utilized. Prototypes are often utilized in developing new products. There's also, if you're making revenue, if you're at the point of making revenue, there is a very nice research and development tax credit available. And these are things that aren't well known by people and are often overlooked. And once again, having a tax professional or accountant or somebody to help you with that is, I think, fairly important to understand and know what those things are and how the laws have changed.
And you're correct. We tend to focus on making sure our income is correct and making sure our expenses are correct. But there are a lot of tax deductions out there for you. So you have one of them, of course, would be research and development, which could be significant depending on what you're doing and the type of operation you're dealing with. Sure. You also have work opportunity credits. So if you're hiring a specific group of individuals, you could get benefits, both federal and state, in taxes, in tax credits. And what's really different between a tax deduction and a tax credit, which I think is important to emphasize how important the tax credits are. A tax deduction, you're going to get, for every dollar you spend, your savings in tax all depends on your tax rate. So if you're, spending $1, your tax rate's at 40%, you're only saving 40 cents. But with a tax credit, it's a dollar for dollar deduction. So it can be extremely substantial, and you can, if you're not utilizing those all in the current year, there are some carry forward provisions for those. So it's important to think about that.
Once again, having somebody to give you that advice is obviously pretty nice, a pretty good resource.
Exactly.
So what are the other types of resources that you recommend for entrepreneurs starting up a business?
Well, there's a stigma of recommending the IRS. But I will say that the IRS does have a great website. They do have some great publications. In fact, some of the material we've talked about today are kind of in their publications. They have publication 583, which is starting business and maintaining records. They have some videos. So they do have some great resources out there for you. The other thing is small business administration. They have workshops that are available for small businesses. You can get mentors that kind of help you in your particular profession. So I would definitely visit their website, see what resources they have. You have, especially if you're wanting to learn a little bit about accounting software, computerized accounting, you can take a course, and I've taught that at Fresno City, or State Center Community College District, on computerized accounting, so that for a fairly reasonable cost, you can take a night course and kind of learn about accounting, learn about QuickBooks. I think is one of the programs that they use. Sure. Another great resource is the Pie Shop.
Yes,
I mean,
thank you.
It really does. I mean, you have access not only to mentors in the engineering department to kind of help you and mentor you through that process, but you also have access to both legal advice and, for myself, accounting advice.
Yes.
We provide that to the Pie Shop, relatively free,
Yes.
I would say.
Yes.
And you're definitely taking advantage of forging those professional relationships right now as you're starting off your business.
Yes.
Is extremely important. They're going to be valuable when you go and you're expanding your business operations, and to be taking advantage of those now while they're relatively free is definitely something I would advise all new entrepreneurs.
Well, sure, as well as existing businesses.
Exactly.
I was part of an SBA program that involved existing businesses such as myself, and they brought 15 companies in throughout central part of California, and the class was sort of characterized as a mini MBA, and part of that was realizing that everybody had shortcomings, even for businesses that were established, making money, had been around for maybe 20 years, that they all had shortcomings that they had to take care of. So it's never too late to try to correct your problems with accounting or whatever the case may be.
Exactly.
But it sure would be nice to try to establish some of these things and get good practices in place when you first get started.
Exactly.
So, of course, you mentioned the Pie Shop being a resource. Sensiba San Filipo is one of the partners with the Pie Shop, and we really appreciate their sponsoring and their help. They do provide their services twice a month, and they bring in one of their staff comes in and gives advice for a couple hours twice a month, and that's a wonderful resource. And as a member, you don't pay for that time, and you can get a lot of good information.
Exactly.
And so we're trying to create, of course, this atmosphere that helps you have a better chance of being successful with your business. So we really do appreciate that. Do you want to talk about some of the things that Sensiba does? Some of the
definitely. Yeah. I like to brag about my
Sure,
company.
I'll give you the chance.
Well, again, we're a full-service accounting firm. We do have offices in the Bay Area, so San Mateo, San Jose. Our headquarters is in Pleasanton, Morgan Hill. We also just recently opened up our office here in Fresno, so as part of a merge with another company. So it's been a great move for our staff and definitely for me. We do primarily tax, accounting and assurance, or auditing and assurance, which would be some of your financial statements. We also have a division of our company that does financial planning. And we have a staff of about 150 plus of individuals that come from diverse experience and different industries, along with about 20 plus principals in our office. Okay. We have just got the award. We've been considered the top workplace in the Bay Area in 2018.
Wow.
8 years in a row, we've been noted as the healthiest employer. And just recently, which I'm really excited about, we got the Best Accounting Award for Client Satisfaction. So
Wow, that's impressive.
I am very excited about it. We're considered what they call a B corporation. And what that is, it's a special kind of designation for businesses where we use our power of business to help with social and economic issues that are in, or problems that are in our community. And so we emphasize a lot on definitely community service. We just did a survey of our company. About 96% of our staff are involved in community service involvement.
That's wonderful.
So yeah,
that's
we're really doing. They really focus on our key cores of family and community and firm. So
wonderful. Well, very impressive, and we're really very happy that you guys are partnered with the Pie Shop.
great to have the opportunity to do
Well,
this with you.
so I hopefully that the information given here has been helpful, and also I'm assuming that it will maybe generate some questions in your mind and hopefully make you think maybe I ought to look into that, whatever that happens to be. And I appreciate you coming in, Tami. It's nice having you here.
I appreciate it.
And please check this podcast out. It's going to be broadcast in a couple of weeks, and hopefully you enjoy this. And you can also check out our other podcasts that are published on the Pie Shop website. That's the Pie Shop, ThePishop.org. Or you can call us here in the Central Valley at 559-481-5004. We're located at 1755 Broadway in the Mural District in downtown Fresno. So thanks and goodbye from the Pie Shop and Podcast.